In this video, I want to give you an overview of the expenses and the sales projections and the cash flow and how it will impact how much you can give out as a loan or pay back as a loan, actually, how that will affect your cash flow. So let's look at this budget. This is an example of a barbershop in Kenya. So we have some one-time cost, we have some quarterly costs, we have some monthly cost and everything. So this is a real-time budget. We have some transportation, marketing, salaries, everything is on here. Here we have startup cost is around $4,000 and monthly total 1,000, and startup plus 1 month is around $5,000. Okay, so here we've made a sales projection. So like revenue of one stylist at the shop, one barber, and product sales. So we have different streams of income. Stylist for women, shaver and haircut for men, and we have product sales. So we made some calculations here based on this shop. So the total sales would be around 278,000 Kenyan shillings. So let's say we have customers per day on the salon, on the barber, and revenue per salon per customer, per barber per customer, revenue products per day. So out of this, we have calculated that total amount of sales as a projection. So let's go to the cash flow, the same sheet. So the cash flow is month 1. We have the sales projections, the same number, only divided by half, because we're starting the business, then we think it's you're just gonna start, so the sales are not total yet. Then we have month 1 startup capital that are coming in as your total income. Then you have your one-time expenses, and then you have your normal monthly expenses, and you have your interest and loan repayment, because you start to pay back, in this case, interest every month, but you start to pay back the principal as well, month 4. So the total cost 603,000. So we have a net income of expenses minus income is 129,000. This amount we use for the second month, and there we go again. So here we see this whole calculation. Yeah. So here month 4 we're gonna pay back the principal as well. So let's go to the loan repayment schedule. So this is an example of a loan repayment schedule. So let's say we have, let's make the screen a little smaller. Yeah. So we start with the loan is 500,000 shillings. Yeah, we have a monthly interest of 2%. We can change it 3%. We can do 4%. We can do anything. Let's keep it for 2. Yeah, and everything changes automatically in this sheet. So let's say we want to have 400,000 as a loan. Automatically changes in the sheet. All the green numbers you can change. So in this case, we have like 500,000, and we're going to have a loan repayment of 100,000, and we're going to pay back in month 4. But they need to pay interest every month, 2%. And so this is the outstanding interest payment, repayment of the principal, and the total repayment. So month 4, they're going to pay 10,000 plus the principal, 110,000, and the outstanding at that time is 400,000. And so you calculate the interest. So now let's say we want to repay 50,000 every month. This changes. You need to have, like, now you have 30 months to pay everything back. Yeah. But here you can see as well how this will affect the cash flow. So in this case, it will not really affect too much, because this looks like a very profitable business based on the sales projections. But let's say if we have like 250,000 every month, you still see it's profitable, you see. But let's say if you do 400,000, well, it's still profitable. So in this case, it's okay. But let's say it's 500,000 in 1 month. Here you see month 4, you're gonna lose money. Yeah. So in this case, it's you can just calculate how much pressure the loan repayment will have on your cash flow. So in this case, you cannot pay back this because you don't have that money. Yeah. So with 100,000, it's okay. So obviously, we don't want to have too much of a burden on the loan repayments on the cash flow, because otherwise we cannot grow, or we cannot invest, or we cannot pay our bills. But we also don't want to spend too much time in repaying our loan back. Yeah, because if we do, then there will be a problem, because otherwise it will just, we need to pay back that loan every month. And you see here in month 9, we're making a profit of 624,000 or even more. Yeah. So, yeah, so that's that balance. Okay. Thank you.